Somewhere in the background, a massive wallet just made its move. What's happening with Shiba Inu? Well, the debate over the token burn strategy is heating up as investors wonder if it can ever reach the elusive $0.001 mark. Whales are moving silently, and the supply dynamics are reaching a boiling point. But what am I even talking about? Well, let me explain. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. As we enter the third day of 2026, the Shiba Inu community is locked in a fierce and highly intellectual debate over the long-term viability and effectiveness of its token burn strategy. The core question that everyone is asking is simple yet profound. Can burning enough tokens ever truly propel the price to the elusive $0.001 mark? The path to this ambitious target is fraught with significant mathematical, economic, and psychological challenges. This matters immensely because for many retail investors, the $0.001 dream is the primary psychological anchor that keeps them holding the token through periods of extreme volatility. The background of this situation is Shiba Inu massive circulating supply, which currently stands in the hundreds of trillions, a legacy of its origins as a community-driven meme coin. To reach a price of $0.001 with the current market cap, a staggering and almost unfathomable amount of tokens would need to be permanently removed from circulation. As we look at the current burn mechanics, it is clear that the project is at a critical crossroads, where the community must decide if burns alone are enough or if a massive, unprecedented increase in utility is the only sustainable way forward for the ecosystem. The headline news today is the awakening of several major Shiba Inu whales who have started burning billions of tokens as the new year begins, a move that has caught many market observers by surprise. As per reports, this sudden resurgence in whale activity is setting the stage for heightened volatility and intense speculation. Simultaneously, a new AI-driven analysis has highlighted the sheer scale of what they call the supply problem. According to recent sophisticated data models, Shiba Inu would need to burn approximately 576 trillion tokens, or about 97.8% of its current circulating supply, to reach the $0.001 mark, if the market cap remains stable at current levels. This revelation has sparked a heated and sometimes divisive debate among top-tier analysts, with some calling the target mathematically impossible within any reasonable time frame, while others argue that aggressive, community-led burns combined with explosive ecosystem growth could eventually make it a reality. The new repayment plans and other recent governance developments are also being factored into these long-term predictions, as they demonstrate the core team's commitment to long-term sustainability and investor protection. The market reaction to this intensifying burn debate has been a complex mix of speculative interest, strategic accumulation, and cautious selling. Currently, Shiba Inu is trading around 808 units, but some bullish projections suggest a potential 5% increase in the coming days, possibly reaching the 850 units level. The 24-hour trading volume remains remarkably steady at approximately $180 million, reflecting the ongoing and deep-seated interest in the token's deflationary narrative. The total market capitalization is holding firm at over $4.7 billion, maintaining Shiba Inu's status as a heavyweight in the crypto space. However, the sentiment on the ground is clearly divided. While some traders are aggressively buying the dip in anticipation of more massive whale-led burns, others are quietly exiting their positions, citing the daunting supply numbers as a major red flag. The price action is currently reflecting this intense tug-of-war, with Shiba Inu showing incredible resilience, but struggling to break through major psychological resistance levels. The $0.001 target remains a distant and challenging dream for now, but the current volatility is providing plenty of high-stakes opportunities for short-term traders and speculators. On-chain evidence provides a much clearer and more objective picture of the actual burn activity currently taking place within the network. Data shows that the burn rate has seen several sharp and significant spikes as 2026 starts, driven by both automated mechanisms on the network and manual burns by large wallet holders. One highly bullish scenario involves removing 450 trillion tokens from circulation over the next few years through a combination of community efforts and institutional partnerships. This would significantly tighten the available supply and could, in theory, lead to a massive and sustained price appreciation if demand continues to grow at its current pace. Technical analysts note that the token's supply-to-demand ratio is the most critical metric to watch in the coming months. If the burn rate can consistently and significantly outpace the rate of new tokens entering the market through various ecosystem rewards, the deflationary pressure will eventually become an undeniable force in the market. The on-chain data also reveals that the number of long-term holders is continuing to increase, suggesting that a large portion of the community is still betting on the long-term success of the burn strategy. Analysts are deeply and fundamentally divided on the long-term implications of the current burn strategy. The path to $0.001 splits into two primary and distinct scenarios. The first is the burn-heavy approach, which relies on massive, coordinated, and highly publicized efforts to reduce the supply at all costs. The second is the utility-first approach, where the burn is viewed as a secondary but important effect of massive, real-world network usage. Experts suggest that the implications of failing to reach the $0.001 mark could be a significant loss of community morale and trust, which are arguably the project's greatest and most valuable assets. However, if the project can successfully transition into a high-utility ecosystem with millions of daily active users, the burn rate will naturally and exponentially accelerate, making the $0.001 target much more achievable. The analysis suggests that the missing factor that many are passing over is the deep integration of Shiba Inu into global payment systems and decentralized applications, which would provide the sustained and organic demand needed to complement the aggressive burn strategy. The community reaction to the $0.001 debate has been incredibly passionate, vocal, and at times highly emotional. On social media platforms, the community is split between those who believe in the pure power of the burn and those who are calling for a more balanced focus on the network's utility and developer adoption. Sources suggest that the core development team is well aware of this internal debate and is actively working on new mechanisms that would incentivize and reward users for participating in the deflationary process. As per reports, the developers are prioritizing utility infrastructure to ensure that the burn rate is tied directly and transparently to network growth and usage. This move is seen as a strategic way to address the supply problem without relying solely on the generosity or whims of a few large whales. The consensus among community leaders is that while the $0.001 target is incredibly ambitious, it is not fundamentally impossible if the ecosystem continues to evolve and adapt to the changing market conditions. The developers are also reportedly working on several high-profile partnerships that could bring more burn-heavy applications to the network, further fueling the community's long-term optimism. Looking ahead, the forecast for Shiba Inu is heavily and inextricably dependent on the success of these coordinated burn and utility initiatives. In the short term, which covers the next week to 1 month, the primary focus will be on whether the burn rate can maintain its current momentum and whether we see any more mega burns by major whales. Any such event would be a major bullish signal that could trigger a significant price rally. Long-term forecasts remain deeply split. While some optimistic analysts predict a 1,000 times potential by 2030, others warn of a potential 50% plunge if the community's high expectations are not met with tangible results. What to watch in the coming months includes the total number of tokens burned via network transactions and any major updates regarding the new repayment plans and other governance milestones. Additionally, investors should keep a very close eye on the broader crypto market trends, as a sustained bull run in major assets would likely provide the rising tide needed to lift Shiba Inu toward its ambitious and challenging targets. The $0.001 mark remains the ultimate goal, and every single token burned brings the community one small but important step closer to that reality. While the burn strategy is a powerful and compelling narrative, it is absolutely essential to maintain a balanced and realistic perspective on the significant risks involved. The primary risk is that the burn rate, despite the best efforts of the community, may never be fast enough to significantly impact the price in a time frame that satisfies most investors. Some highly skeptical analysts predict that both major assets and Shiba Inu could lose more than 50% of their value in 2026 due to structural issues, market fatigue, and unrealistic expectations. Furthermore, the heavy reliance on whale-led burns is a double-edged sword. If these large holders decide to sell their massive positions instead of burning them, the price could face overwhelming and catastrophic downward pressure. Macro risks, such as increased regulatory scrutiny on deflationary or community-driven tokens, also continue to loom over the project like a dark cloud. Investors should be extremely cautious not to get caught up in the hype and should always conduct their own thorough independent research. The path to $0.001 is a grueling marathon, not a quick sprint, and there will likely be many more corrections and challenges along the way. Stay informed, stay rational, and manage your risk with the utmost care. The journey of Shiba Inu is far from over, and today's updates prove that the ecosystem is resilient. From massive whale burns to innovative utility plans, the team is working hard to secure the future. Will the bulls reclaim control, or will the bears continue to push? Only time will tell. Make sure to stay tuned as we continue to track every move in this ever-evolving story. See you next time. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.